Hey guys, Stock Saturday, and I thought I'd just give a little quick plug to Webull. It's not sponsor, it's just a referral link they're offering. So you can sign up and deposit £100 from the looks of it by the 9th of November, and you get 20 free shares. Valued, this is last year's promotional picture actually. It's not $40,000, it's up to 6,000. But I mean, you're not going to get 6,000. It's three generally $3 shares, and you get 20. You might get a $10 one. If you're really lucky, then you get the big prizes, but it's quite unlikely. But yeah, I think $60 minimum is pretty good offer. Trading 212s is normally a tenner. So yeah, anybody who wants to sort of try out the platform, I'll be honest, I withdrew my money last time, and yeah, wasn't all that impressed. But people might have different thoughts on it. So there's a link in the description and as a pinned comment. So portfolio-wise, it's been a little bit red, largely due to crypto and gold and silver miners, which doesn't seem to be reflected in the underlying price. It's just people not liking the miners, which I'll get back to. But yes, down about 12,000 for the week. I have made a deposit. Oh yeah, so that's 3.5% down. Just comparing to the S&P, is down 0.85%, so doing a little bit worse than that, of course. The Nasdaq is up 0.35%. Some earnings sort of starting to come out. Tesla's sort of looking. Everyone's sort of very impressed. I didn't think it looked all that good. Net profit down from the looks of it about 30% on last year. Revenue sort of beating expectations, but yeah, if you're not making money, we can all raise revenue if you really want to. But yeah, so Nasdaq did a little bit better. Um, yeah, I did make a change this week. Sold off £2,000 worth of Process. Sort of 10 cent is looking, I thought, reasonably fairly valued now. You're sort of looking at 19 trailing PE, sort of maybe 16, 17 on a forward basis. The stimulus has helped quite a bit. I sort of missed out on the Alibaba and Baidu runs for somewhat. I did make a little bit of money back. Obviously sold them at a loss. Do gain a little bit of tax loss harvesting from that, so it's not all bad. Hopefully what I've put it into does better. But yeah, so sold 2,000 of Process and put 5,000 into Interactive Brokers, which isn't included in the returns numbers that I mentioned as always. But yeah, we'll have to see. And semiconductors sort of doing a little bit better. Taiwan Semi above 200 now, 203. So looking pretty solid. Broadcom back up to 173. So yeah, things looking quite good. Vanguard, emerging markets sort of hanging around, still waiting for a bit more news on China's stimulus, which we'll come back to. Stellantis sort of has risen a little, but yeah, waiting on the news next week. And yeah, IMAX sort of not doing all that much. So no earnings this week. Just looking at some bits and pieces until we start getting a little bit more of my holdings. You've had sort of bank earnings, and as I say, one of the two tech companies coming out. But yeah, I sort of obviously focus on my holdings. We have had production numbers for Fresnillo. They're a bit like sort of most of the UK companies. They do two earnings a year rather than quarterly earnings, but you get production numbers in the intervening quarters. And yeah, their production numbers looking quite good. A quarterly production of silver at 14.4 million ounces, sort of slightly on the low side of what they've been predicting, but still pretty good. Annualized to sort of 58 million ounces, which is still, largest in the world, and they are starting to get some love for it. So, yeah, that's looking pretty good. Gold of 156,000 ounces, which is rather good, annualized again. That's over 600,000, which they were, I think they're sort of saying 580 to 630. So, yeah, sort of in the midpoint of that. And yeah, 427,000 for the year. So that's a little bit lower for the year. They're hoping to have a good Q4, and they're sort of reiterating guidance for the year. They give the lead and zinc numbers as well. It's sort of obviously not a huge revenue driver. It's mainly obviously the gold and silver, but yeah, good to sort of keep an eye on. Its production's up 4.7% on the lead and 10.5% on the zinc, so not too bad. That's on last quarter as well, up on last year, sort of 21% on the lead and 11% on the zinc. So yeah, not too bad. Year-to-date numbers are sort of in the middle of that. So yeah, pretty good. And as I say, 2024 outlook still saying 55 to 62 million ounces of silver. So expecting a strong quarter four, and gold production 580 to 630. So that will need quite a strong Q4, to be sort of at the upper range of this guidance. They'd be needing over 200,000 ounces of gold. So we'll see. I can't imagine they get to the top end of that. I don't understand this, taking the whole company in silver equivalent ounces as well. I think that's just trying to sort of flatter themselves and appeal to silver, silver bugs. But yeah, 101 to 112 million equivalent ounces of silver. But yeah, I'm not a fan of that number. And talking of silver, we have KGHM's monthly numbers as well for September. So looking quite good, 61,400 tons of copper compared to 59,000 last year. And the year-to-date numbers are up. So that's on the 9 months to date, 543,000 compared to 527. So pretty strong. Silver is doing a little bit worse, but 113 tons compared to 126 last year. The year to date is down on last year. This was due to sort of maintenance mentioned last month, I believe. And yeah, again, sort of smaller numbers they have in their side materials, but obviously I'm focusing on copper and silver. So yeah, looking good. I like to keep an eye on these numbers every month. Just check they're on sort of guidance, and they're one of the only sort of miners that I've really seen that provide monthly production numbers. So it is very nice. So I did think this was interesting. We've had a little bit of news on China's stimulus, and there was a meeting with the IMF and Janet Yellen sort of attending there, IMF's chief economist, and they're sort of discussing China's stimulus sort of without them almost. Their view has been that, or Yellen's view has been that raising consumer spending in China as a share of GDP is really important. Not sure whether she means important to them or important to China, really. And along with measures to address problems in the property sector, I think that's probably more important. Yeah, she said at the press conference at the start of the IMF and World Bank meetings in Washington. She said, so far, I would say I haven't really heard any policies on the Chinese side that address that. So, bit of a dig, I thought. Not sure the US are really in a position to be sort of criticising too much with their enormous deficit, but we'll have to see. They are still saying they expect growth to be at 5% GDP growth for the year, and it's at the moment, so far for the year, at 4.8%. So whether they're trying to stimulate a little bit more, I think everything that they've done wouldn't be difficult to get 0.2% more GDP growth, but yeah, we'll have to see whether it looks like they're coming out with a little bit more detail on the stimulus in the next couple of weeks, but I am still somewhat fading this stimulus. Just doesn't seem all that much. What they are doing, as they're saying, could be partly going into the housing market and sort of bailing out partly the firms, whether they're going to sort of dilute the the house builders and sort of finish off those properties, but get a stake in the builders. Don't know. That would sort of seem one solution to me, but yeah, I don't really see how that sort of thing would, significantly help people like Tencent. So I am kind of still watching that, and as it's reasonably still at a high point, there's potentially more process on the sell pile. I think this stimulus is still a big driving factor with a lot of commodities. You've seen sort of iron ore still, it got a huge sort of boost up from the lows on the initial stimulus news, but it's still way down from, earlier in the year, sort of in the 130s. You look sort of since the somewhat large bump from the initial stimulus, it sort of rocketed up and got to 112, and then that seems to have been it. It's just trickling down ever since. Maybe they're more detail, if they're looking to do housing market stuff and carry on sort of building these homes that they can't afford to finish. That might get a little bit of a boost, but I think there's more to iron ore than that, really. We'll have to see. Copper is sort of holding up a little bit better. It's certainly not down on the year. Got a big spike up in May time. People were sort of betting on leveraged futures of this, blowing out, and it was never really going to do that, I suppose. But it bottomed out sort of a couple of months ago at, just under $4 and is back up to 4.33. So I think 4.33 is still a reasonably good price for the miners. They're certainly not loss making. Even sort of the higher production cost people like KGHM sort of doing okay here, I think. They're sort of 330 costs. Not making a fortune, but yeah, not doing too bad. But the gold is kind of the one that's baffling me. Year on year, we're talking about sort of just on $2,000, and this time last year we're now 2,747. And we haven't really seen a huge amount of cost increase. The all-in sustaining cost for a lot of miners is sort of broadly the same. I mean, we do have crude oil sort of at a relatively low point despite the various wars going on. You sort of look on the 5-year, and it spiked up in the start of the Russia-Ukraine war, but he's down to a sort of 3-year, I guess, low. So you'd think that would be helpful for gold, but I think this is probably an indication that it is just central banks buying physical gold and no one really interested in the miners. But obviously this all feeds through to profit margin for the miners, so I do think it's only a matter of time. You can't have margins and net profits sort of blowing out, beating earnings, and the price not going up forever. So yeah, I think it's a matter of time, really. If this price sort of carries on, we get third quarter earnings, third quarter being July to September. July, the lowest point of that quarter really is 2,330, up to what have we got here, 2,653. So sort of an average of 2,500, with a lot of all-in sustaining costs at $1,300. That's a very healthy margin. Silver sort of not quite as steady a move up, but I think people are sort of waiting for, the breakout. Gold sort of pushing higher, and then people suddenly realizing, silver is poor man's gold, as they say, and you've got the sort of industrial demand on the side of that as well, photovoltaics and defense and all sorts. So yeah, I think silver should sort of hopefully start to catch up And obviously gold at all-time highs. Silver has reached $50 a couple of times before, so inflation adjusted, it's still way off all-time highs. $50 in 1980, even if it was sort of manipulated up to that, is very different to $50 today. So we'll see. Economic news then. We had a hell of a lot of people speaking, and that's sort of news these days. President Lagarde from the ECB and sort of Bank of England governors, and yeah, everyone gets a little bit worked up about these speeches. Got some PMI numbers from the UK, a little bit weaker than expected. Provisional for October. Composite sort of 51.7, so that's still above 50. It sort of still means expansion, but a little bit worse than expected. Jobless claims, initial jobless claims lower than expected and lower than last week, but continuing was up a little bit, so don't really know what to make of that. They're not huge numbers, but continuing claims has been sort of going up for about a month now, so yeah, people didn't seem to like that. New home sales a little bit higher than expected. Not a huge amount this week, really. Sort of core durable goods orders were slightly better than expected, and that was basically it for the week. So you can see the Friday that sort of gave me a bit of a pasting. I think I would have been near enough break even if it wasn't for this. CleanSpark, CleanSpark and Riot both down sort of about 5%. Coeur Mining and Equinox down about 4%. So it's gold and silver and crypto stocks down, even though Bitcoin dropped a little on yesterday's sort of later in the evening, but nothing dramatically. I didn't think it would cause this, but yeah, people seem sort of very emotional over all this, and gold is just at all-time highs basically. It's sort of maybe 1% off all-time highs, so didn't really understand the gold move, but as I say, longer term, I think this will sort of resolve itself as they start posting what should be pretty amazing results. So we'll have to see. Fresnillo at least is sort of already 8% in the green. Maybe should have done all of Fortuna Mining. It's sort of underperforming now. But yeah, we'll see. I was very close to selling American Tower and sort of buying into one of these. Either could put it into Fresnillo, could put it into something like Hive. Obviously, it's still a fairly small position in the actual stock on Hive, but we'll see. Interactive Brokers side, Pan American, 24.70. That was sort of under 20 not so long ago, so it's dropped 2.5%, but still pretty good. KGHM sort of just hovering around the same point, really. On the option side, starting to get sort of big fluctuations on this, through the day and certainly day to day. Hive sort of up to 29,000. It's sort of been, a little bit higher than that. Haven't bought any this week. I haven't bought too much of anything. All I did buy was some Equinox January 2027 options. Quite liking them. It's the only thing that I really sort of am keen to buy beyond next year, really. I don't really want to be buying crypto anything after next year. That's sort of the anticipated end of the bull market. So gold and silver, I still think could be doing really well in 2026. Potentially sort of downturn in liquidity, potentially a recession if it is going to come. It looks like won't be sort of next year, could be 2026. So gold could be doing well. So been buying a little bit more Equinox. I do have some of this is sort of January this coming January, so expiry in 2 months, and they are sort of very quickly looking like they're going to be worthless. We just wonder whether to just take the hit and get a bit of money out on them now, because it's $10 strikes for Equinox, and they're still $5.60. So whether we get almost a doubling in the next 2 months, could happen off the back of earnings, I suppose. But yeah, I guess it's probably a write-off on those. So that'll be 29 contracts down. Riot sort of looking a little bit worse for wear after the crypto drop. Coeur Mining sort of took a bit of a hit. I sold sort of 3 of those before. Haven't sold any more just yet, but it would be tempting if maybe do a sell of those and buy some of the long-term Equinox ones. And yeah, not a lot of move in sort of anything else really, but I have 5,000 in cash ready to go. Sort of half wondering whether to wait until the election. We've sort of got, 7 working days now until the election, or 7 business days. So yeah, could sort of top up before the election and see if we get a Trump win. That would be sort of worth doing it beforehand then, I think. Although we could get volatility either way, bit of a downside drop and then sort of an up spike. I think some people are predicting, within the day after the election. But yeah, I think if Kamala wins, you probably get a reasonable drop in crypto. So don't know, maybe sort of worth even selling something else and sort of creating a much bigger cash pile and buying the dip on a week Tuesday, or a week Wednesday rather, the day after the election. But we'll see. I might get tempted into buying something before then. So yeah, short one today. Leave your thoughts in the comments below and like and subscribe. See you soon.